Monday, October 16th, market analysis, Stan Ehrlich. Good morning, 10:02 California time, a little bit past the middle of the trading day. I start out with the indexes. Here we have the December E-mini futures contract. We had, past tense, a previous head and shoulder top that was working just great until October 6th, when we had the October lows occur. I said so on that date because of a bullish engulfing ER buy signal, period. We also caught the top of the market to the exact day with an ER red bear sell signal. So far, so good with the buy signal on October 6th, a week ago last Friday. We're starting the second week now after that Friday buy signal. Last week was generally pretty good. Thursday and Friday, we slipped back down some. I talked about it being a normal technical correction. Now today, we have a low early of 354 and a half, which is under 357 and a quarter on Friday. That's a lower low, and in the same price level genre of the Thursday's low as well. Now we've gotten above Friday's high. That's a bullish engulfing, typically meaning we're about to go up some more, but it's not an official buy signal because we're not oversold like we were on October 6th. So I'm expecting new highs for the move up since the high of October 6th, and to continue to chew into the rather wide, modest resistance area above the market, all the way up to approximately 4,603 or 4. If we get there, when we get there, and after we get there, we should be starting to accelerate upward much faster, much quicker, unless we're significantly overbought at the time we get there. Then we're going to have a downside correction and try it again. I'm very bullish. I think we might have new highs for the whole trend, higher than July 27th's top of the market. Again, bearish engulfing, sell signal with my automated trading system, ER signals. Looking good. What can I say? We do have a little problem at today's highs. This is the 1-minute chart, and it does go back to last week. So you can see it moving into high ground, fiddling around for the balance of the day, the next day, and then reversing a little the next day, Thursday last week, and trying but not succeeding on the opening Friday, and then making a lower low slightly on Friday of last week for the SPY, Spider. And now we have challenged the high almost exactly of the last week. So closing above today's high would be very significant, and a significant new high close since that gap down on September 21. Remember, there is still, how about that, a little tiny bit of gap to close. We need to touch 438.43 to close the gap completely. It came very close twice, but never backed up that much. So far, it looks like it could do it yet today. We are currently up 5 points and 1300ths at 36.60, so it ain't that much further, and we're probably going to hit buy stops when we plow through the previous tops. Next chart is QQQ, having a little bit more trouble getting back to its highest high. But remember, the Qs, NASDAQ, never did break out of its head and shoulder top. Never did start. The head and shoulder formed, but there wasn't any breakout. So the other indexes which did break out, and this is the NASDAQ futures, it did not break out either. Next, we've got the DIA. It did break out, and it broke out September 21, classically, dropped like a rock until October 4th. And then a couple of days after, October 6th, Friday, a week and a day ago, bullish engulfing, turned around. It is the lowest low for that move down. We almost got the exact highest high, but sell signals in the top formation. We got a great buy signal before that on June 1st. There have been some really good signals in the stock indexes for quite a long time now, a couple of years. And of course, many before that. So buy signal on the Russell 2000 last Friday, October 6th. And we came very close Friday to making a lower low, but we did not. It looks to me like everything is about to make new highs for a week or two or more. Next chart. Yeah, that's exactly it. Let me show you the October low chart I've had up here for a couple of months now. This was my bullseye, and I obviously missed it at 407 and a half-ish, and it was today's date. Now, until the bullish engulfing on October 6th, I was heading right down at the right angle to get to just about where I wanted to. But hey, you can never make the market do what you want it to do. You always have to move with it. So luckily we got good signals, turned around on that Friday. I am expecting to see new high and a new high close here. This is the spider very soon. Futures, futures, futures. Okay. Quick picture of the E-mini again, a little bit different point of view. Came into support, bullish engulfing, did not get down to its minimum downside objective on the pattern. Pattern's now defunct because the neckline has been broken several times. And we've closed above it a few times. And I think maybe this week we're going to stay above it all week because I'm looking for new highs. Next chart is NASDAQ. Of course, never did break the line to begin with. Next, bonds. I'd love to see this bond market hold and turn up and make higher highs than last week. That would help. I would expect the indexes, stock indexes, to rally more and more easily. We did have a great longer-term trade on the bond market with bearish engulfing sell signals and the ER3 overnight strategy taking a short position on April 13th of 23 and ride the whole darn thing all the way down until we finally got stopped out last week. We were short at almost exactly 133, and the strategy got out at 112. Whoa! Next chart. 10-year notes. Same thing applies. Next resistance to the upside, I think we're going to get to very quickly here in the next week or two, 109 and a half. Next chart. Crude. Bounced off support, did come down, closed an old gap. I'll put that over here because that's where the gap was closed. And off of support, bounced very nicely on Friday, and not doing too much of anything interesting at the moment. I look for this to continue to rally further. We've got basically higher highs and lower lows over a significant amount of time since March of this year, and that dictates indicates an uptrend. Next, heating oil. Same commentary, major support held. We've now attacked previous highs, managed to make new highs slightly, pulled back to support again, and I think we're going to make new highs again. Next, natural gas. New short sale signal on Wednesday of last week. ER3 got short just, I believe, on the opening of the next day, and that date was October 12th. We're riding the trade down. We're still short. It's working great. This is a new low and likely a new low close. We have a little gap to close between today's high and yesterday's Friday's lows. Very small, tiny gap, but that's a gap. And I've said many, many times, gaps are like a black hole in space. They tend to suck the price action back into the gap. So I'm not going to be surprised if in the next few days, this week, we rally to close the gap. That would be touching the low of Friday and then come back down. Yep. Next. Gold. We got a buy signal at the bottom. again. That was the bottom back over there, February 28th. This was the bottom also on August 21. Major turning points in both cases. We also have some whopping tops. There we go. July 20th this year. Now, this is spectacular. I didn't expect it to take off like a bat out of you-know-where on Friday. So now we're overbought all of a sudden. I doubt that we're going to get this gap closed. It looks like a classic breakaway gap. They're the gaps that are least likely to be closed, other than an exhaustion gap and a common gap. Sometimes you get something called a midway gap. They're very rare. So higher levels, we're already chewing in a resistance. I cannot rule out 2032 next. This is the gold trade from the buy signal a few days ago. We got stopped out yesterday morning's, today's session's early part of it on a downside retracement. Took a huge profit, a great move. And the market is moving up a little bit at the moment without us. But again, we're overbought. And this just worked great. The yellow line is minute by minute. The ST, and this is a 5-minute chart, is the STS smart trailing stop moving up as the market moves, and other factors are involved. This is not your standard percentage risk or dollar risk type of stop. Next, the silver market, two highs, both bearish engulfing. Before that, the low, the bottom of the market, March 10th. We got the bottom, great buy signal. We got the top, great sell signal. We got almost the bottom. We almost got the top. And this time we missed a signal. Gold got it, silver didn't. Let's see what happens with platinum in a moment. I'm expecting this to stall out a little, but continue to work higher. We have to watch for some signals here. A little bit of a pullback and then start to chew into highs higher than last Friday's highs. Next, platinum did provide a bullish signal at the bottom of the market. Back here, almost the low. That is the high. That is the low. That is the high. That's a high for a fairly decent break. A high for a fairly decent break. Almost the low for a fairly decent rally, and almost the high for a damn good break. Platinum's got a buy signal on the 6th of October. Sound familiar? So retracement is not uncommon. Took a little longer than normal, so we're not in an ER3 trade, unfortunately, but it would have been right where the green dots are. Everything's working fine. ER1 probably still has a position for the ER1 overnight. Remember, ER1 gets in the day of the green or red immediately, that same day. ER3 tries to get in on little retracements like this one within 3 days or so after the signal. Next chart, high-grade copper, probably going to make new lows. And I wouldn't be surprised to see it slither off to 3.3 something. Next, soybeans. We have a buy signal on Thursday. We almost got the exact low of the day. We were in at 1275 and 5/8. I'm sorry, we're actually in at 1275 and a half. And the low on that day was 1273 and a half. Oh, gee, I missed by 2 cents. So it bottomed out 2 cents below my entry and never looked back so far. Today's low is higher, and today's current quote is at the moment 1286 and a fraction. I'd love to see this jump up above the high of last Friday, the signal day, and also probably the same day. It'll do it above last Thursday, the signal day, and last Friday, the highest high since, which was almost the same. That's correct. Next chart, and I'm going up. So am I going up on soybean oil? There was a head and shoulder top. It is still intact. This is the kind of buy signal that we got in the stock indexes that caused it to get above the neckline. Will it do the same thing on this pattern? So far, no. So far, the pattern's good. It says we're supposed to go down to about 50. The bullish engulfing does not necessarily mean it's going to go above the neckline, which it should not do if the pattern is still good. It only means that we should get a rally out of the bullish engulfing, which we have, and a darn good one in 2 days. So profits abound at the moment. Plenty of room to take profitable trade. Let's watch to see what happens if it gets to the neckline, which I think it has a chance of doing. Nowhere near overbought. Next chart. Then down if the neckline stops it. Now in the meal, there is a very broad head and shoulder pattern, and it is unable to close, has been unable to close below the neckline. Like the NASDAQ, for example, it got down to it, fiddled with it, never got below it on a closing basis. So it jumped back up. This is in the process of ruining if it goes sideways too much, or if it starts to make any significant higher highs, excuse me, start ruining this large, broad shoulder, broad head and shoulder top. If we drop like a rock all of a sudden, the pattern's still good. This little pimple over here on the shoulder doesn't really destroy anything. So let's see what happens. Corn. It's going to make new lows and a new low close, lower than the low we saw on September 19th, pretty soon, next week or two, just like wheat has been doing. So we were oversold. We have a little bit of a minor bottom here, little double bottom. I don't see anything interesting on the bullish side whatsoever. I think maybe today's high is it, and we're ready to make new lows right away. Next chart, live cattle. Almost the top on a sell signal on March 1st. Almost the top on a sell signal. Didn't do all that well on April 19th. Fantastic sell signal on the top June 7th. Fantastic sell signal on the top of a very good break just before July 20th. And we have a sell signal on the top before this market came all the way down to last week's lows. So I think we have a chance of still working down to the support. That would be 182-ish. And in the next week or so, maybe this week. Next chart, hogs. Support looks like it's about to give way. It looks like we're about to close under 67.82. We're very, very close to it right now. Could happen today. If we close below that red zone, we'll see new lows since June and probably start another significant leg to the downside. Next stopping point, about 62.8. Next, OJ, green tree disease, waiting for a sell signal. I don't know how high is up here. Next, cocoa. How about that? About a week ago, I put this little arch mark on the screen well before these last 4 trading days, including today. So our rally high was only down up here up to 3.482. So it climbed a little. I was worried about Wednesday of last week because it was a bearish engulfing, but that didn't hold. Higher high, higher close, higher high, higher close. And now we are in the price range at which I expect, hope, think there's a possible shoulder about to form. Wouldn't surprise me a darn bit. Here's the head, 2 rally highs, relatively close to each other. I can't call it a double top, but that's the head of the formation. Shoulder, clearly, gigantic bearish engulfing just before it went all the way down in one day to the pivot point. and neckline slightly upward slanted, typical for head and shoulder top. Here's the approximate time frame and price in which that arch mark I drew, I'm thinking it's going to roll over just like it did over here. It took it a couple of weeks over here on the left, which was end of July, beginning of August. Yeah, it may take a couple of weeks starting at around these prices to go sideways, maybe a little tiny bit higher and a little lower. But today's range could actually dictate a lot of the sideways range for a week or two. Next chart. Overbought conditions in coffee in a resistance area. Added another little layer of resistance right there also on Friday and this morning. Make me believe we might be turning back down again. Next chart. Sugar. Looks like bad data, but I don't think it is. And that spike up is bearish because it jammed its way into new high ground. If that's exactly what it did, I'm a little suspicious. And then went flip-flopping completely back down on Friday. So today, very normal looking, climbing a little bit more. Really don't have too much to say here. So I've got higher highs to exceed in order to stay bullish longer term, because I am basically bullish. Higher highs, higher lows over time dictates the trend. Next, we're going to cotton. Little tiny bit oversold. Bounced for a day on Friday, slipping a little today. I think we're definitely, well, I think we're definitely I think we're going to go down to 83.30-ish and very plausibly 76.90 next chart. And we're back to the E-mini, which is almost high and last. It looks like, going back to index page, the Russell made a new high for the morning, and we have come very close on the spider, but right now a little correction after a rally. Yeah, we're actually slipping a little, but still up 3.5 decent points at the moment. You guys have a great day. Talk to you tomorrow.